Catherine Konicki, NEPC is out with its fourth quarter survey of endowments and foundations, and 80% of the people you surveyed think that the economy is in a better place now than it was last year. So why all the confidence?
Well, I think there's a number of things that are giving the endowments and foundations that opinion that the economy is in a better place. I think part of it has to do with the economy continues to grow. We were up, 5% in the third quarter. I think there's confidence there. I think they see companies are doing well, good profit margins, and also you've got lower inflation. You've got the downturn in energy, but that's also providing consumers the ability to be able to spend more than they've been able to do. Getting low gas prices, that gives them more consumer spending to have.
And with that confidence, they say 96% of them think that stocks are going to be up this year. That said, they don't think the S&P 500 is the best place for returns. They see it in hedge funds and private equity. Why is that?
Well, the domestic equity markets have been a 6-year bull market. I think there's still some tailwinds for return with profit margins and consumer growth. But I think they see that over the long term, you want to be invested where there are going to be more opportunities. They see more opportunities in the private equity markets. They have been helped recently because you've seen, there's been a good ability to have IPOs, to get exits out of your private equity investments, and also rising prices that kind of follow along with the stock market.
And the dollar's rising as well, but 70% of the folks you surveyed aren't worried about currency risk. They're not hedging. Now, I thought this was the smart money. They can make money or lose money two ways.
That was a very big surprise to us in the survey, that investors aren't concerned about the erosion of their assets because of the dollar strengthening, especially in the developed markets. We think one of the reasons is that there's very limited ways for them to hedge their foreign currency if you're in developed markets. There aren't a lot of products that are out there that are hedged non-U.S. developed markets programs. You have to be large enough to hire a separate overlay manager to do the currency. So we think that it may be a concern, but there's not a lot of opportunities to implement it.
And finally, they are watching the Fed, however, and about 70% think we're going to get a rate hike this year. So they're confident the Fed's going to hike rates. Tell me why. Because a lot of people say it's not going to be till next year now.
Right. Yeah. I don't know if you took it today, if their minds would have changed, given that we've seen a significant decline in interest rates in the month of January that may change their opinion. I mean, they've been saying this for years, that interest rates are going to rise. And so I think they feel if the economy continues to grow strongly, if there's the threat of inflation, that there could be the potential rise in interest rates. And I think we had about a third of the survey respondents felt that it could rise between 50 basis points and 1%. I think maybe looking out a month later, it may be a different story now.
Well, people keep saying it, so sooner or later, it's got to happen. Thanks a lot for coming on, Kathy.
Thank you very much.
And thank you for watching The Street.